I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. I mean, it just really depends. But and again, that wouldn't be the cap, but that just shows you that's really, a level above 5,000. It would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well.
Tom Lee, a veteran strategist and crypto bull, outlines a compelling macro case for Ethereum and Bitcoin amid a transformative moment in finance. At the heart of his view is the idea that Ethereum is having its ChatGPT moment, a phase of mass realization where its utility, particularly via stablecoins and smart contracts, is rapidly gaining institutional acceptance. Wall Street is not just dabbling, it is converging on crypto. Ethereum, with its programmable architecture, is becoming the go-to infrastructure layer for real-world assets, stablecoins, and next-gen financial services. Meanwhile, Bitcoin remains digital gold, a resilient store of value with the potential to rival gold's $22 trillion market cap. This dual narrative, Bitcoin as the ultimate trust layer and Ethereum as the execution platform, sets the stage for explosive growth. As Tom suggests, both assets are deeply undervalued relative to their long-term potential, especially as traditional finance and Web3 begin to merge in real time.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
I think Ethereum, is a chain that I think is getting a second look. I know that there have been criticisms of it in the past because of either how layer 2s and layer 1s interact or just really sort of progress and upgrades to the network. But to us, I think the real thing we have to recognize as we look at what's happening in the real world is that Wall Street is converging onto crypto, and they're choosing to do a lot of this work on Ethereum because stablecoins have completely changed Wall Street's mind about how useful crypto can be. As we've said, the stable coins have created the ChatGPT moment for crypto because we're seeing consumers really use it in a viral way. Merchants are beginning to really love it, especially outside the US. And now banks are realizing it's actually a decent business model. We just saw Citigroup even just say that they're looking at creating a stablecoin, even if it's just to manage deposit base, but still, it is really Wall Street converging onto crypto. And at the end of the day, a couple things are going to be important. Wall Street wants to find a chain that's operating compliantly in the US, and they want to find a big one, and where there's already a lot of real world assets, tied up and on the layer 1, and that's why Ethereum, we think it's going to become extremely relevant over the next decade. And I think it's important for people to kind of have some framework in mind. We're still adamant fans of Bitcoin because to me, Bitcoin is, first of all, it is really the ultimate form of trust at the moment, and it is digital gold in an easy way. And if someone says, well, what does that make it worth? The gold's, 22 trillion network value. So Bitcoin should be worth $1 million. And there's plenty of future businesses that can be built around Bitcoin because of its, stability. Ethereum is a smart contract enabled platform. And so it is unique because you can actually store real things onto the blockchain, whether you use layer 1 or layer 2. And I think maybe the real killer app, and this is what stablecoins are showing, is that as we move into a world of like AI and we're trying to create, units of pricing and to simplify the movement of goods and things, simple examples of like tokenizing things from the real world onto a blockchain, you couldn't do it really on Bitcoin because that's not what Bitcoin's designed to do. So I think as you're thinking of Wall Street converging onto crypto and then AI innovations taking place and the idea of using even tokens or stable coins around that, well, then that's really when it comes to saying, well, Ethereum really is the largest smart contract platform in terms of network value. And that's what makes it attractive. I generally agree with people who say crypto responds to global liquidity. And so if central banks are easing, then we should see it in crypto prices first. And that's why crypto actually is a leading indicator for the stock market. And the fact that Bitcoin broke out to all-time highs is actually bullish for the S&P. But the interesting thing is that crypto is still not that widely held. So I think that, Bitwise has a great stat. They say 95% of Bitcoin's been mined, and only 95% of the traditional finance world doesn't own Bitcoin. So there's a real mismatch. And so I think Bitcoin continues to be the leading crypto asset to watch. But to us, as risk appetite recovers, Ethereum and small caps are pretty highly correlated. And I think that that's why Ethereum, in percentage terms, has more upside for the next few years. But guess what? Now there's many, many, many venture-funded businesses around using AI and ChatGPT that are exploding and getting to $100 million run rate so quickly. Well, I think that's what's going to happen in crypto. I think this is a really big moment for the industry to realize that as Wall Street converges and they're bringing a lot of interest and bringing a lot of new users and a lot of new applications, that this could transform actually the importance of smart contracts and Ethereum. So I think Ethereum's sort of dominance could actually grow dramatically. If we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum is closer to 15,000. And that makes sense. I think the layer one, as you get into layer one, you should apply a higher multiple to sort of theoretical usage, because it's the same reason software companies get higher multiples than retailers, right? The more you're getting away from the customer and the more it's pure signal, you apply higher multiples to that business. And so I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. I mean, it just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well.
Ethereum's technical targets are gaining momentum. According to FundStrat's analysis, Ethereum could hit $4,000 by month end, with a realistic path toward $10,000, $15,000 by year end. This would represent a clear breakout beyond its all-time high, validating Ethereum's role as the financial internet's layer one. Ethereum's growth is backed by real metrics: rising stablecoin usage, enterprise adoption, and increasing staking yields. Importantly, Tom Lee underscores how treasury strategies, akin to what MicroStrategy did with Bitcoin, are now emerging for Ethereum. Companies like BitMine are using capital markets and ETH staking to expand ETH per share, offering a new kind of compounding mechanism. Meanwhile, Bitcoin continues to lead on macro signals, with central banks poised to ease crypto, especially Bitcoin, acts as a leading indicator of global liquidity. And yet, 95% of traditional finance still doesn't own Bitcoin. That imbalance offers a massive upside catalyst as institutional risk appetite returns and new entrants flood into crypto.
At the core is our belief that Ethereum is dramatically undervalued as a token. And for the reasons I described, that crypto is seeing its ChatGPT moment, and really the second order beneficiary there is Ethereum. And so acquiring an asset that can appreciate by 10 times or more is a really good use of a treasury. In fact, MicroStrategy, when they began their treasury strategy, Bitcoin was 11,000, and it's 120,000 today. And so I think that's foremost where we're coming from. And some people say, well, why don't you just buy Ethereum outright? Well, an Ethereum treasury company can actually increase your ETH holdings per share by taking advantage of capital markets and volatility to raise capital. And they can also earn money from staking. And for instance, BitMine initially funded with $250 million of ETH, and that was closed on July 9th or July 8th. And then 3 days later, BitMine increased the treasury holdings by an additional 250 million. So in just 3 days, doubled the amount of treasury holdings, and that was as of Friday last week. So you can see that there is an advantage to a treasury company because what you thought you had was of ETH relative per share just doubled in 3 days based on just the company acquiring more ETH. And of course, that activity continues. So I think that there's an advantage to owning a treasury company that is using capital markets to increase your ETH holdings per share. Nobody can really ever correctly predict how Washington, what path it chooses and what bills pass. But I think the reality is that crypto regulation is vastly improved over what we saw for the last 8 years and 12 years. And so I don't think anyone should be too discouraged by developments in Washington, but they should, of course, watch it closely. And then keep in mind that you can always have some things fixed through either reintroducing items or executive orders. So I wouldn't read too much into whatever happens out of Washington. We're in the middle of earnings seasons, and financials start to report in earnest, this week and next week. But there have been a lot of comments from these financials about stable coins, and stable coins are frenemies for the financial industry. So I think that's just something people have to watch out for because they are both a opportunity, but it's also a threat to their legacy business. So you have to keep in mind that in some ways, the financial industry is one of the strongest and savviest lobbying groups, that they have a role in how crypto regulations can pivot in either direction.
Looking forward, Tom Lee remains confident in both Ethereum and Bitcoin as core holdings for the next decade of financial innovation. He argues that Ethereum's unique role as a smart contract powerhouse makes it essential for tokenizing real-world assets and coordinating AI-driven economies. Bitcoin, on the other hand, serves as a rock-solid monetary foundation, an instrument of trust in a chaotic world. Regulatory clarity, while imperfect, is improving, and Wall Street's interest in stablecoins is reshaping attitudes toward crypto. From Citigroup's experiments to real-world asset integration, we're entering a period where crypto becomes infrastructure. Ethereum's value may deserve tech-like multiples, 15x or higher, similar to high-growth software companies, reinforcing the thesis that a $15,000 ETH is not only possible but rational. As crypto adoption deepens and finance evolves, both ETH and BTC stand at the center of the next global paradigm. The opportunity is now, before the blind panic to accumulate begins.